Yeah, so good afternoon, everyone. So India Stack, as we all know, right, the last panel also spoke heavily about, how India Stack, the data layer, the consent layer, has added immense value, not just to the financial services, but today we see the whole value, as basic as the Digi use cases that is coming out of it. As an organization, Protean, we have been at the forefront of putting out these services, whether it's e-sign, whether it's e-KYC, and we see the number of volumes that are playing today, right? It's astonishing to see the kind of usage Aadhaar is providing, how verification of Aadhaar is simplifying the use cases, not just for finance, but across sectors. And that's where I say, India Stack was the first example or the super example of DPGs coming in play, right? So various DPGs coming into the role, whether it was at the identity layer, at the paperless layer or the cashless layer, every layer has added value. Whether it's Aadhaar, UPI, whether it's account aggregator, right? So, having passed through this and moving towards the new frontier of DPI, as we say today, digital public infrastructure. And Rishi, what other than ONDC as the biggest example I see, do you want to throw light, how we went through the DPI and how India Stack is now complementing the whole ONDC story?
Yeah, thanks, Metesh, for that introduction. Look, it's actually really important to understand why this ID layer, the payment layer, now, an account aggregator, the data layer was created. If I had to describe ONDC in 2-3 sentences, it's basically we are the API layer that stitches together the other digital public goods to actually deliver a service to the end consumer, whether it's on e-commerce, whether it's on financial services. So we become the standardized rails, right? So now what does that mean? So Aadhaar solves for ID, UPI for payments, collections like the panel before was talking about, or any annuity collection, right? It could be lending, it could be insurance, it could be making investments. It could be a subscription service that, like if you're buying like a Netflix subscription or what have you. So our role is two-pronged, right? So on the e-commerce side, like if I had to, to describe ONDC in 2 sentences overall, it's we try to surface markets for sellers and create choice for buyers. Now, on the e-commerce side, it's largely, whether it's mobility, groceries, food delivery, what we have enabled is the ability for any medium and small startup to compete against an embedded dominant incumbent. And I mean, I know you read all of this in the press, but the Zomato killer and Swiggy killer and Amazon, that is not our design. Our design is, but like while you have 2 dominant incumbents, can other players enter and improve the service over time as well? So for example, PhonePe building PIN code in terms of food delivery wouldn't have happened if it weren't for ONDC. Similar, even Paytm and food and grocery delivery. So you create competition. A Namayatri wouldn't have happened if we didn't have the beacon protocol and mobility rails, and suddenly created competition in terms of a lower cost competition for auto drivers to actually be able to source business via the rails. Now, whilst on e-commerce, we help what you would call redistribute the profit pool, like the large dominant incumbents make of that 20, 30 to up to 50% of the sales price. I think we serve a slightly different purpose on financial services, but still aligned to the overall goal of how do you surface more products to users and how do you create more, bigger markets for sellers. And just to take the lending example, because it's a good segue to what people were talking about before, there are 2 major problems, right? We talk about this whole fintech and lenders, but honestly, in the last 2-3 years, and I had a large role to play in even creating the OCAN standards, which is the Open Credit Enablement Network. The major learning was the T-shirts didn't know how to talk to the suits or vice versa, right? And there was always a negotiation over APIs, over process. So the first step is, can you standardize the rails? Like if you can see, because look, regulations are very black and white, but the interpretation and the application of them in the real world is very different. So What we've done is managed to standardize that across suppliers, especially on credit, insurance, and investments. Then we went to the fintechs and saying, now we can onboard and we can sort of aggregate the inventory. So that is like a big use case in reducing the tax and toll of trying to integrate with someone, right? Now, if you have digital natives, I think what UPI did was bring 300 million people into using a smartphone to make payments. Now, can you embed credit? Can you embed insurance? Can you embed all these other financial services? Or now that they're digitally native, can you even embed e-commerce solutions? So can you help them purchase things that they otherwise wouldn't be able to purchase? So this rationalizes integration cost. The other thing is, and I mean the logical thing is, anything you digitize actually reduces onboarding cost. So we have stats from two NBFCs, Lending Cart and Snapmint, that when they deployed Account Aggregator, they had three major upticks. One was applications increased by 30% just because it was easy to apply. Fraud rates fell to 0 because they were getting bank statements straight from the source, so there was no fraud. And the third one is the overall cost of acquisition dropped by 65%. Now that is huge if you apply it to a bank, right? If you digitize the whole process. So you bring down the cost, you bring technology cost of integration, you bring down the cost of operation and acquisition. What happens is you sachetize the size of the product. And the minute you do that, you open up to a much wider base. So for example, and a lot of lenders in this room would know, to acquire a customer costs you about 1% of the loan size. Now, I mean, if you know the guys who go collect the documents, who do the verification, all that costs you 3,000 to 5,000 rupees. It's just natural that the floor of the ticket size will be 3 to 5 lakhs. And that leaves like a massive unserved segment. Now, some NBFCs granted have built and served to 10,000 rupees and 50,000 rupees. But what the issue is, those crazy interest rates, because you know the other costs haven't fallen. Like, so for example, I mean, we've worked very closely with Nupur and the NPCI team to try to reduce the cost of auto pay so that you can do very small ticket sizes across all financial products. We worked with Aadhaar to reduce the cost of Aadhaar. I mean, like I think a year and a half ago, it fell from 20 rupees to 3 rupees. Can we even push it down even further? Because as all these input costs become less, the size of the ticket you can offer reduces, and it's completely digital, completely self-serve, and that's how you like widen the market. So that is our mandate, whether it's for e-commerce or whether it's for financial services. How do we drive down the cost? And then the other important thing is you must have a commercial model for everyone in the ecosystem. I think what happened, I mean, it might be a little controversial to say it anyway, with UPI is the deep pockets won because there was no commercial model for the front end. So we are very clear that anything you do on ONDC, everyone in the chain will make money because otherwise it doesn't scale equitably, it will scale in a skewed fashion to people who have the deeper pockets. And then the other last thing I'll do before I hand back to Metesh is we also play a role in, like, look, regulations and policy, by and large, I think we've done a great job. Even compared to the West, given the lack of the gyrations that we've seen, it's been more controlled growth. But I think we also solve for today and the problems of yesterday. We don't solve for the problems of tomorrow. So if we are trying to build a network model, today there's no legal construct that exists that is blessed by the RBI that lenders can adopt. So like we are playing a role in going to create that legal construct and get it approved by the RBI. We're working with SEBI on creating pilot programs to reduce the entry point of mutual fund distributors. Because I mean today, like for example, if you want a Kirana store to be a mutual fund distributor, there's no chance of that happening. They have to study a book which is about that thick, take an exam. So we've actually submitted a proposal. It's actually been blessed, and we are going to run a pilot over the next 6-7 months to see if we can do, like, when you deliver something via technology, where the recommendations are made by the technology, you take away the issue of recommendation, when usually the mis-selling ends up when it's in-person recommendations. So this is the kind of stuff we do in terms of trying to build a digital public good. So access, like you create connectivity, creates access, you sachetize the product to widen the market, you make sure there's a commercial model, and then finally you work with the regulators and policymakers. So what can you change for the future, right? So other things which are flashpoints, I mean, happy to discuss it, like the 60,000 limit on eKYC. Now that's been around for 5-6 years. Like it's like, nobody's considered inflation, cost of things going up, should that limit be increased? should we relook at sole proprietor KYC? Because today you require 3 documents, only one is digitized. I think now the Udyam is also a officially valid document. But can you use all these digital tools that we've created to be able to create a more seamless process that is safe, secure, prevents all the money laundering issues that the regulators worried about and KYC, but also serve consumers at the sachet size and in just a few minutes. So look, I think it's a good segue, given that we've teed this up, is now what does it take to adopt? And maybe Metesh, in the eye of this storm, trying to bring lenders on, trying to bring seller apps on e-commerce, trying to bring buyer apps on e-commerce. And I think Shashank in the previous panel referred to building the muscle. And I think we will take 2-3 years to build this muscle in the industry because I don't think everyone's digitally ready. Everyone says they're digital, but up to a point. Not everyone has the muscle to do everything end-to-end digitally. So I hand over to Metesh to talk more about that.
So while we are all maturing digitally, but I guess the lessons today India provide in terms of DPG and DPI is for the world to learn from. I guess whether it's Aadhaar, UPI, ONDC, ONDC also, as partner to ONDC, we also incubated Honest, which was education and skilling transaction open network, and furthermore, right? And the best part of DPI is, it drives inclusion. It's an open network. And what was fulfilling, and I concur with you, Rishi, when you said the adoption of these networks, right? So how can we get these networks adopted at scale? And it was very fulfilling when we were, as ONDC partners, we were trying to onboard few artisans in remote villages of Rajasthan or maybe Kochi, and making them so prudent that using their mobile phones, so all, mobile phones being a seller on the network and have direct access to the customer, which I guess, till few years back, it wasn't possible, right? So today we saw, these artisans are handicraft manufacturers directly selling. So that's the kind of reach first that artisans get because of this open network. They need not be worrying about the logistic. The payment is handled by UPI. The whole adoption that came through the India stack of account opening, the payments, collection, everything has simplified. I guess with Honest also, we are saying, how the pillar of education and skilling, right from getting the courses delivered on demand to the remotest of the village, getting the mentorship, internships, scholarships, whatever, right? So I guess this has multifold into opportunity, or the India opportunity, I would say, right? And all today need, the citizen of India needs a mobile phone, a decent, good internet connection. That's where we are seeing the telecom industry with the 5G rollouts has opened up a tremendous use case and opportunity for everyone, every citizen that we look out for. And let me come back to the technology part of it, Rishi. I guess, we have been saying adoption, and adoption needs, again, the way, the last panel talked about onboarding and then collection. There are many pieces, how do we onboard sellers with the ease, right? So I guess these technologies has to come forward. We have complementing DPIs and DPGs as Bhashini coming forward. We can localize in the particular dialect of the customer so that I can onboard those artisans. And we have actually used Bhashini to further simplify so that the artisans can be onboarded while they understand what is this network in their local dialect. So that's the power of furthermore DPGs coming in. And I guess banks and other, financial services or other sectoral, companies can learn using these DPGs and make use of it to simplify various part of the processes. Furthermore, we also went ahead, and in December when we took the presidency of the AI, similar to G20, now India is hosting the AI presidency for next 1 year. We envisaged a story, and Rishi, this is interesting, we envisaged a story of farmer, right? And I remember we worked on it earlier also, where right from which crop to sow, Honest DPI can come and do some sachet learning for him, right? Using data analytics from various, maybe Google or ISRO, data can be crunched, what crop to sow, where from from where he can buy the seeds and fertilizer. That's where ONDC came into play. Maintaining the whole story again. There are various, agri schemes running and agri, knowledge base which is run by the government, which were provided to the farmer as sachet learning. And that's, I love the point when you said these DPS are providing sachet products, right? And these learnings were having on demand, right? He need not go through the whole course, right? So wherever he has a problem, he can just ping into the network and get the learning out. And then eventually, once the produce is there, he can sell again through ONDC, know the fair price of his produce. Uh, and all this he's doing maybe voice-based or in his local dialect, right? So that's the tremendous power when we saw multiple DPIs, DPGs coming together and solving for a user. And not to forget, backing up wherever there is a farmer loan, KCC loan required. I guess, ONDC Finance again comes forward and, he did not go anywhere. Like a mobile controlled by a citizen is the powerful tool where the complete DPI, DPG, India stack comes together and solve. Rishi, just as we are solving this, how do we see AI coming into this play? Where do you see AI will add value to this? And what role AI can play into this?
Sure. So look, there's a lot of data beginning to get created. And before we even get to AI, I mean, I know, like at least on most investor presentations and all, everyone says AI, ML, we are doing something or the other. Look, at least on the ground, and here's my perception from actually trying to implement this with, and like I run the financial services piece at ONDC, so it's obviously more biased towards the fintech side. There's a lot of data now, whether it's account aggregator, whether it's platform data. We've actually worked with 3 organizations, one for dairy cow financing case, one for agri case, where there's actually crop yield data, which is packaged for a lender. One is a supply chain financing, where there are orders from a distributor to a OEM or a retailer to a distributor. What we find is there's very little capability to consume this sort of data. So we are creating now the structures, at least where everyone can use a standardized model, at least that the data comes in, means different things. Then, even once you've consumed it, to make sense of it, like how do you have a decision, a yes-no decision that yes, I want to lend to this person, or I want to give an insurance policy to this person, and then the question is of how much you want to lend, or how much of a policy do you want to give. And can they return that in 60 seconds, in 90 seconds? Because, I mean, we all use stuff online. Waiting even 15 seconds feels like you're waiting 5 minutes, right? And like typically a lender's responsibility, 4-5 ghanta lagega. I mean, like, man, like on a mobile phone, you got to return something. Okay, so we can start with 2-3 minutes to begin with, but eventually in 60 seconds, you'll want to see multiple offers. And I think this is the role where, like at least machine learning, AI will come in, because there's lots of data going to start streaming at scale. Organizations are going to have to build the capability to have multiple instances of being able to consume this data, make sense of it on the fly, and then return a response consuming that. And I think we are just in the beginning of that phase. So, since the advent of the credit bureaus, now we've been around for about 20 years. Yes, we made leapfrogs in that, I'll give you a decision instead of in 2 weeks after someone manually goes through it. It might take, 1 day, 3 days, something, and I'll come back with a response. Now we're saying, crunch that into 60 seconds and give back a hard offer to users. So that is one place on actually serving a product. The second is even serving a product. So you might have, now tomorrow, 20 pizza delivery guys or 20 lenders or 20 investment options over the network when you broadcast a search. The other place I think it'll play an active role is making a recommendation based on user behavior, because I think AI will play a role in giving a very personalized recommendation to a person, because it's like when you walk into a department store. Okay, now I won't even say the US. Now in India, the larger stores, you see racks of multiple things. It's almost confusing. So can you then use, before we were saying, can we show as many options as possible? Now we have too many options. Can you just show 1 or 2 options that the person might choose? Because there's also evidence that if you show too many options, they get confused and don't buy anything. So now you show one or two options, the chances of someone converting become higher. So I think that's like on the supply side, it'll play a role in serving the offer, and on the demand side, it'll play a role in actually what should I provide to this customer that they will actually pick and will be useful to them.
And just to add, maintaining the networks, right? So AI can also play a role, supporting the network participants, whether at the buyer side, seller side, or seeker provider side. What infrastructure, what support is required. Is the network participant even adhering to the policy or the network policy, right? So we can stop and have a proper governance over the network. So it's a fair play for everyone. So that's the role of AI. And just to add to Rishi, with all this data, I again see AI coming in as maybe a 24/7 network bot to assist everyone, whether it's the buyer or the seller or the network participant in between. Grievance management can be one of the topmost use case AI can solve because, and I agree to your point, a lot of data is flowing over the network and each data is so much valuable, whether it's for, today 13 domains are live on ONDC, education is adding up. With all these immense use cases that DPG provides, the data it's generating, I guess we are at the cusp where, we'll have furthermore use cases. We just need to marry this DPG technology with, I guess, the, future where the AI brings and simplifies everything for, I would say an AI service module would be the future where, you can build a hyper-local service offering. We can use AI to bring in the, what kind of services or the government public's benefits that you are eligible for, that can open up a huge Pandora box of use cases to further unlock. And not less to say, in my last meeting with Pramod Verma, he was saying, AI aa jayega theek hai, but we need to be responsible with the AI, bring in the data security and governance around the AI. I guess that's the part to be considered. We need to further look into how do we play the AI thing with responsibility, have respect, exclude the biases that AI can bring in. And I guess have a more fulfilling use cases for the citizen level, whether it's the rural India. So I guess the gap between India and Bharat will blur off with all these, technologies that are coming up.
Yeah, so maybe just to add to those, I think the three elements when it comes to this data, and we get this question a lot, like what about privacy, right? So look, one side you have consent, and this question comes a lot, especially with account aggregator, that look, we are actually creating, almost weaponizing the ability to like send your data to wherever you want with an OTP. But the issue is what happens once it goes. So account aggregator has these policy frameworks that you can only use it for the purpose that you have consented for. But look, the world is not a very structured place, right? Sometimes people will start misusing that as well. So the first concern is privacy. Now on one side, you're consenting to share, you can revoke your consent, but some of your data is already going to be out there. So the first thing we're going to do to solve for that, we're already working on it, is something called confidential computing. I don't know how many of you are familiar with that. But it's experimental yet, is where you actually have a black box where the data flows into the black box. Let's just take lending, it's an easy case because then the lender puts their underwriting model in the black box as well. So what happens is the lender doesn't see the data till the user selects the offer and becomes a customer. So if I'm broadcasting to 20 lenders, not all 20 will see it. Just the one whose offer I select will actually get my data because I became their customer. So that is one element of it. And I think the second one is, yes, this eliminating biases, because that is a huge problem. I think it already creeps into underwriting. And like for the lenders in the room, there are blacklisted PIN codes. We all know that, the blacklisted professions. Now you tell me, like, if we're going down to an individual personalized level, then whether I get a loan or not should be on my past repayment history or my bank statement if I don't have a loan, and if I have more than I earn more than I spend, I shouldn't not get a loan because of oh, I shouldn't get a loan, not get a loan because of where I live. In the West, there have also been studies about like African Americans tend to get more expensive or fewer loans than say Caucasians and that sort of thing. And the danger, like AI will start giving recommendations based on what the general data set, the way it's moving. But like an aggregate data set doesn't account for historical, inequalities or inadequacies or the vagaries of your environment. So I think that is where we need to be responsible, that you should set some guardrails where maybe those should be excluded. That might result in slightly higher NPS, but it's like the question is, it's a hard thing to assess that how much of that cost should everyone bear. But I think that's something we need to be cognizant of as machines start to take over, and that human element of saying no. Like for example, there's a lot of discussion about women not getting loans. But as the more we study it, it may not be so much that bankers don't want to lend to a woman. It may be 300 years of, or maybe even more of cultural conditioning that, no, men do this. I mean, it is changing, but obviously, like if you look at the credit bureau data, it's increased over the last 15 years or so, but it's still not where it should be, given the number of women in the workforce. So I'll stop there. I think we're close to out of time. I don't know, should we take questions now, or?
Rishi,
Yeah,
just to add, you made a very, very clear point. I guess somewhere DPI has to, so you spoke about confidential computing, that's very much required. And when it comes to data play, and I guess, the last panel also spoke about lending, how data can provide, or the governance around data can provide a continuous assurance around a profile, right? So we may have past data. You spoke about I believe the CIBIL score, the credit score, maybe some alternate data sources like maybe ONDC's network score should come in and provide a continuous assurance around the profile of a customer, so that citizen and the services around the citizen can be further unlocked, right? And I guess the whole DPI story further helps us to empower, make it more inclusive, right? So I guess these three, confidential computing, continuous assurance, and the inclusive empowerment of each citizen is the tremendous opportunity AI, DPI can provide. Yeah. Any questions? We are ready to take.
Check. Do we have any questions? If yes, please feel free to raise your hand and we'll get the mic passed. I believe no questions. Any summing up thoughts
there's
from?
one.
There is one? All right. I like waiting till the very last second. All right. The gentleman out there in the blue, we'll get you the mic, don't worry. If you can just tell us your name, which company you represent, and a brief question. Thank you.
Sure. Hey, this is Pankaj from Deloitte. So I'm a researcher. I was researching into the cost of onboarding has substantially reduced. So according to you, one of the reports I did, it's come down from $23 to just $0.1. Like you talked about moving from 20 to 3 rupees, right? So given the cost is reduced, does that mean, say, distributors like ONDC would be able to, the ticket size would substantially get lower from like 3 lakhs to 5 lakhs to maybe 3,000, 5,000? What sort of benefits that you see to the rural economy and the consumption story of India?
So look, our mandate is to help reduce this ticket size, right? So for example, we did a presentation for NPCI and SEBI, a 3 tripartite presentation about the cost of onboarding for mutual funds. So I know there are mutual funds out there that have a 100 rupee ticket size. There are also mutual funds, largely it's 500 plus or it's 1,000, 2,000, 5,000. The reason for this is the amount of money the mutual fund makes from the smaller ticket. Because say for a liquid fund, it's like a 5 basis points or something. Now, the lifetime value of that customer, they'll have to stay with that mutual fund for 20 years for a ticket size of that to make sense, which doesn't happen. So there's a KRA cost, it's 16 to 35 bucks. There's a KYC cost, which is like 3 rupees, then whatever the TSP charges over and above. There's a mandate cost. The eNACH cost can be anything again, from 2 rupees to 10 rupees based on what the TSP charges and the NACH charges and so on. Our mandate is to help reduce that. So We will work with SEBI, Kiarika cost, do something about that. Like with autopay, can we, under 250 rupees, it's 1 rupee for registration and 1 rupee for as many times as you present. So by definition, it's fallen. So if you can reduce the lifetime profitability of a certain customer, then the sachet size will come. So, and if we can do it in mutual funds, then credit becomes possible because those are higher margin products to distribute and insurance is the highest margin. That is our mandate. I mean, internally, if part of my goals in the year is how much of that cost I can reduce for the industry. See, the beauty of our structure is we are a company that exists to make other people money. So we don't get any benefit out of this. The whole role of DPI is to create access and to create affordability. So that, I mean, that is our mandate as we go forward. Like one by one, as we do it, we hope to see the ticket size come down.
Once you lower, it will further increase the adoption, accessibility to credit, to multiple of the citizen. I guess that's where I guess ONDC is working for.
So our goal, just so you understand, our goal is not revenue. Our goal is not value of transactions. Our simple goal is the number of transactions. The smaller it is, the better. So we take pride in doing smaller ticket sizes, not the other way around.
Thank you.
So we have one more question. We'll just take it. The gentleman at the back. I hope that's okay to exceed by a couple of minutes, being the last session out here.
Yeah.
Thank you.
Hey guys, I'm Vishal Survey. I'm from Blue Altair. I understand that through AI, we are reducing effort for a lot of, like if I'm an AI service provider, I'm reducing effort and cost for my client. Now, if I were to flip the question on a very higher level, like on a government level, when I am reducing these costs on a customer, one-on-one customer level, how does it impact the GDP? Like I'm reducing the flow of cash. I know like as a service provider, I'll be perhaps making that. So, but I still do feel like it will affect adversely or perhaps positively. I want to know your take on it.
No, if it's affecting adversely, we wouldn't be doing this only. Like why would you, so look, okay, now this is not an ONDC view, it's my own. Like let's just take UPI, right? Like look, there was a lot of hoo-ha about demonetization. In my opinion, if demonetization hadn't given UPI the fillip, it would have been COVID. It was a different seminal event in life, it would have happened 2, 3 years, 4 years later. But what are the side effects and the benefits of UPI coming into place? Cash got sucked out of the system, and demon, the combination. Cash got sucked out of the system. You put it in the bank account, suddenly it's digital cash, everyone started giving each other that. The cost of transporting, the cost of printing, the cost of safeguarding, stocking ATMs, frauds, destroyed notes, all that goes away to some extent. And also the value, like I don't know if you could actually go back and check in that year, interest rates in the country dropped because the banks got flush with cash. So there are all these unintended consequences,
Snowball effect.
Right, like that happened from like creating a network like this. To your point, if we are digitizing and we are reaching financial services and to where they're underserved right now, like today we serve the 100 million, 150 million. Suddenly you're serving 400 more million, how can that be adverse? Like, I mean, I'd ask the question, so the philosophy of ONDC on fintech, credit for income generation, insurance to mitigate against economic shocks, because most Indians are one medical event away from bankruptcy. And then finally, if I can help you generate money and protect yourself, then today your options are a chit fund and an FD, and no disrespect to bankers, but after 5 years you're poorer from an FD than you are like if you invest over there. Why can't a villager have the ability to access a mutual fund that like yields, I don't know, 2009 to 2020, you would have 7 times or 8 times your money if you just put it in an index fund. You're talking about retirement where they won't be destitute, and they only don't have access today. So I'm sorry I'm getting now into that idealistic mode about why we are doing this, but how can that be bad?
I'm not challenging it to be bad. I just wanted to get your viewpoint on it.
No, so you
I kind of align with it already. I just wanted a third person to agree on that as well.
The last thing I should say, like, look, today, we started with this with credit. It was never intended to be for insurance and investments because credit was the flashpoint. But it was actually 2 personal experiences that, look, one was like, look, if someone's borrowing at 6% a day, even at 18% annually is better off. Like it's a huge saving, right? And someone needs to explain that. The other thing was, like this came from my own experiences, like, yeah, we all have people who work for you and all this, and then they retire, and then you give them a lump sum, and 5 years later they're back saying, yaar, isme kharch ho gaya, usme kharch ho gaya, and now help me again. So I actually started a program like that for 5 or 10 people. And then I was like, okay, if you're doing this for credit for millions of people, why can't we extend it to the other financial services, right? And that's where it came from, and I think everyone describes credit as a demand-driven product that everyone, because they know what a loan is. You know, it's been around for years. But insurance and investments need to be explained to someone before. I would guarantee you, in a city like this, or anyone sitting in this room, insurance and investments are not a push product. You don't have to convince anyone to buy them. But in a village it is because they've never been exposed to them. So that is where we come from. And like, if you can do this, if I can expose like a Kanjivaram sari to someone in Singapore, now these are lofty ideas, and they just buy it off an app in Singapore and some logistics service provider picks it up from somewhere in South India and delivers it to Singapore. It's a sea change in terms of access. So it's like you're bringing your shop into someone's house. And if we can, I mean, that's got to be good, right? Logically, if you're creating a market for someone. So sorry about the long rant, but
No, thank you.
I had a beautiful case
Sure.
of, you know, what Rishi said, you know, from B to C to B, bringing businesses to customers, not the other way around. I guess that's the tremendous change DPIs and ONDC is trying to build. Yeah, thank you.